Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NVENT Electric PLC quarterly report. NVENT Electric PLC offers a wide range of electrical connection and protection solutions across various industries. Their services include electrical connections, power management solutions, cable management, control buildings, liquid and air cooling solutions, equipment protection, power connections, tools, and test instruments enclosures for electronics, systems, and data in mission-critical applications. Their products are marketed under various brand names, including NVENT CADI, ERICO, HOFFMAN, ILSCO, SCHROFF, and TRACHT. They cater to diverse sectors such as industrial, commercial, residential, infrastructure, and energy. The significant increase in NVENT Electric PLC's stock price over the past year can be attributed to several key news events and strategic developments. The company has reported strong earnings reports, raised guidance, and made strategic acquisitions and divestitures that have collectively contributed to its financial performance and market positioning. Notably, NVENT's record sales of $1.1 billion in Q3 2025, along with a 35% year-over-year increase, marked the company's first billion-dollar sales quarter. This achievement led to a significant surge in the stock price, including a 5.17% rise in pre-market trading. The company's strategic acquisitions, such as the acquisition of Tract and the Electrical Products Group, EPG, business of Avail Infrastructure Solutions, have strengthened its position in high-growth infrastructure markets, including data centers and power utilities. Additionally, NVENT's focus on innovation, expansion of manufacturing capacity, and collaboration with NVIDIA have further solidified its presence in the rapidly expanding data center market. Overall, NVENT Electric PLC's stock price has increased significantly due to a combination of strong financial performance, strategic market positioning, and successful portfolio transformation. The primary drivers of revenue growth or decline in the company's financial performance can be attributed to several key factors. Revenue growth is primarily driven by the acquisition of strategic businesses, such as Tract, LLC, and Electrical Products Group. These acquisitions have significantly contributed to the increase in net sales across various segments, including systems protection and electrical connections. Additionally, the convergence of megatrends like electrification, sustainability, and digitalization has led to increased sales growth in infrastructure verticals. On the other hand, revenue decline is primarily driven by general inflationary increases, which have resulted in higher labor, transportation, and raw material costs. Potential imposition of tariffs and trade policy changes also pose a risk to revenue growth. Overall, the company's revenue performance is heavily influenced by its strategic acquisitions, industry trends, and external factors like inflation and trade policies. Net income experienced a significant increase of 84.2% from $321.1 million to $591.4 million. However, operating income margin decreased by 2.2 percentage points. The effective tax rate also saw a decrease in both Q3 2025 and the first 9 months of 2025. The main reasons for these changes can be attributed to several factors. Firstly, income from discontinued operations contributed $214.9 million to net income. Additionally, the acquisition of Electrical Products Group on May 1, 2025, boosted revenue and profitability. Inflationary pressures, including tariffs on raw materials and labor costs, also played a role in the changes. Furthermore, investments in digital platforms, selling, and marketing efforts were made to drive growth. These factors collectively contributed to the increase in net income despite the decrease in operating income margin. The company is indeed generating positive operating cash flow, as evident from the financial summary and detailed information on pages 40 and 43. The net cash provided by operating activities from continuing operations was $426.6 million in 2025, indicating a significant increase in cash inflows from core business operations. This positive trend suggests that the company's financial health is improving, allowing it to generate sufficient cash to meet its operational needs and invest in growth initiatives. The company has experienced significant changes in its debt level and interest expenses over the past year. Notably, the total debt has decreased by $564.3 million, recorded, or $522.5 million, fair value, indicating a substantial reduction in liabilities. This decrease is further supported by the repayment of senior notes and term loan facilities with different interest rates, as well as increased long-term debt repayments. Consequently, the company's interest expenses have also decreased significantly, down by 27% or $20.7 million from 2024 to 2025. The net interest expense has shown a decrease in both the 3-month and 9-month periods ending September 30, 2025, further indicating a reduction in financial obligations. These changes suggest that the company is successfully managing its debt and reducing its financial burdens, which can have positive implications for its overall financial health and stability. Management is confident in the company's long-term strategic operating goals, driven by its commitment to inventing electrical solutions that ensure a safer and more secure world. The company aims to achieve benefits from restructuring plans, successfully integrate acquisitions, and focus on delivering backlog and winning future project work. In terms of growth, management expects increased sales due to megatrends such as electrification, sustainability, and digitalization. To drive this growth, the company will invest in innovation and new products, execute a sustainability strategy, and target higher growth verticals. The outlook is strong, with significant increases in net sales in 2025, driven by acquisitions and organic growth. Management is focused on managing inflationary pressures through productivity and savings from restructuring initiatives, while investing in capacity, new products, and digital initiatives to drive future growth. Overall, the company's strategy is centered around driving growth through investments in innovation, new products, and digital initiatives, while managing inflationary pressures and increasing productivity. Acquisitions and divestitures overview. A review of the company's financial summary reveals significant transactions involving acquisitions and divestitures. Notably, 3 major acquisitions were made in 2023 and 2024. The company acquired ECM Industries in April 2023, followed by Tract in June/July 2024. Additionally, a substantial acquisition was made with the purchase of Electrical Products Group's enclosures, switchgear, and bus systems businesses for $978.7 million. On the divestiture side, the company sold its thermal management business to BCP VI Summit Holdings LP for $1.59 billion in net cash proceeds. This transaction is notable as it resulted in a significant influx of capital into the company's coffers. The company has a history of paying dividends to its shareholders. In fact, it is mentioned on multiple pages that the company pays quarterly cash dividends to its shareholders. Specifically, in 2025, the company declared a dividend of $0.20 per ordinary share payable on November 7, 2025, and paid out a total of $98 million in dividends for the year. This demonstrates a commitment to returning value to its investors through regular dividend payments. That concludes the financial summary for NVENT Electric PLC. Feel free to comment below, and I will be happy to answer them when possible.